Right now, on Thursday, August 20th, 2026, one number is redrawing the map of European banking, 47.6%. That is the stake UniCredit has built in Commerzbank, Germany's second-largest listed lender. In June that holding stood at just 34%. Now Andrea Orcel, UniCredit's chief executive, is within touching distance of control. If Berlin sells its remaining 12.7% government stake, UniCredit would jump beyond 60% and effectively control the bank. The real story is not the number, it is that German resistance, once loud and absolute, has begun to soften. That shift changes the calculation for shareholders, employees, and every firm that depends on Commerzbank for credit. Only months ago the German government flatly rejected a takeover approach worth about 39 billion euros, framing Commerzbank as a national champion. But two forces have changed the debate. First, UniCredit has already built a near-majority stake, so the question is no longer whether it has influence, but how much. Second, Berlin faces a genuine financial choice. Selling its 12.7% stake at a premium would reward taxpayers, while blocking it leaves the bank in limbo. Add wider European pressure for cross-border banking consolidation, and the language has shifted from outright opposition to conditional negotiation. That is why reports today point to Berlin signaling openness, even though political reservations remain. For investors, the practical effect is a repricing of risk. A control premium, the higher price paid for a controlling stake, becomes more credible once a 60% threshold looks reachable, flattering Commerzbank's share price and forcing short sellers to reassess. For employees, the stakes are sharper. Orcel's playbook is standardization, centralized risk management, and efficiency, which usually means branch closures, merged back offices, and job losses. For German companies, especially the Mittelstand, the country's small and medium-sized firms, the worry is that a Milan-led owner might prioritize shareholder returns over local lending relationships. There is also a political price in Berlin, with unions and regional politicians warning against losing control of a lender that supported German industry through decades of crises. The next catalyst is clear: Berlin's decision on its 12.7% stake. If that sale happens, UniCredit crosses the 60% line and can move from influential shareholder to controlling owner, triggering a full takeover process and deeper scrutiny from the European Central Bank in Brussels. Berlin will not give way quietly. Expect conditions attached, guarantees on branches, employment, SME lending, and possibly the bank's Frankfurt headquarters. Orcel may accept some commitments to neutralize political opposition, but only if they do not dilute the cost savings he wants. A parallel Italian bid could distract management, but for now the momentum in Frankfurt is unmistakable. The key takeaway is simple. This is no longer a hostile standoff, it is a negotiation with numbers attached. Watch Berlin's next statement on the 12.7% stake, because that single decision will decide whether UniCredit becomes Commerzbank's owner or remains its largest shareholder. For Europe, the deal matters beyond two banks. A successful cross-border takeover would be the clearest proof in years that a genuine European banking market can work, while a collapse would reinforce the old national boundaries. For investors, the signal is only partly priced in. The moment this moves from possible to probable, the financial landscape shifts from Frankfurt to Milan.